Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, September 25th, 2020. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. We've had a very bearish few weeks here. This is the fourth week here now of September. A few more days left here in the month, but for the most part, an outside month here. We took out the previous session's high price. Blow off top up here, and then we went all the way down here, and we're now below the previous month's low. So a bearish outside month right here. 2 days right now being spent below the previous month's low, and you have a nice little inside day here at the moment. So a nice little range that is developed here from 31.98 up to the 32.60s, and price is now kind of holding in that area, but as you can see, the price has been trending continuously lower, and ever since the FOMC key level was developed here, it's been offered without a strong low. This one looked like a strong low and it was developing, but the failed high here was too much, and now we've traded now here below the previous month's low. So this could be due for much more weakness ahead. You'll notice here the 8-period average continues to trend lower. It's a bearish trending state, so if price were to pop higher, say as high as 3,300, that could be another opportunity for bears to defend and drop this thing lower. Very similar to what happened here at 3,400. So price bounced, got sold, new lows. If we bounce back up again as high as 3,300, we could still see selling pressure as this thing returns maybe back toward 3,100 and the 200-day average. Again, that would also coincide with the midpoint of this key range here at 30.77.5. 3,100 would be the 200-day, and that would be the midpoint here of the key range. So if it gives up 32.31s here, which we're right at the moment, then that would open the door down here to those 77. So again, we'll see how this continues to play out, but even if a bounce occurs, we could still see selling pressure until price is able to reestablish acceptance back above 3,300. All right, let's take a look here at the NQ. You'll see here the NQ, very similar price action, outside month down, and now price is holding right above the previous month's low price. That's 845.5. Previous week's low here, 742s, and both days here that it spent time, all 3 days, it spent time down there, it has bounced right back up. This was a close below at the end of the day, but each time it's spent time down here, it has been able to bounce back above. Right now, inside day, narrow doji day right here, 47% of ADR. ES is at 75%, so quite a bit different here for the NQ. But this one's inside day at the moment, and very similar ever since this failure up here. We've seen lower highs, and we've seen a bearish downtrend take hold. We've seen bearish outside days, and we've seen 1 or 2 day up moves be sold. So this was a 1 day up move and sold, 2 day up move sold, 2 day up move sold, and right now again, if price fails to get above 11K here, or if there's a trap above 11K, then what has been happening lately is a bearish outside day down. It's been that type of market here where we fail above the high and drop. So above 11K, if it gets above 11K and starts to find a failure above that zone, then we could be looking again at more weakness ahead. 10.393 would be the next key level down. Right now 11.058.5 is this key range high. If it fails again at that zone, that could open up the 10.393 level down below on the next move. So again, we're still going to continue to push lower until we find that strong low. Once we find that strong low, we could see a very good bounce back toward 11.5. All right, let's take a look here at crude oil. Now, crude oil has been in an increased volatility state for a while here, but has backed off again. So we had big time volatility here, narrow compression, another big wave of volatility back down, and now another narrow compression here. So this compression right now over the last 4 days here is something to keep an eye on, because it's building in a range that could build that next build the energy for the next move, likely back downward toward 37.5. If we make this let's make it a 4-day range here. Did it go? Let's make that 4 days right there. Click OK. And now it's going to measure this 4-day range right here. And that reading comes right there. And the last time it had that reading was here when it had this narrow 4-day range and we saw major expansion. Again, this narrow reading suggests that we could be looking at expansion to come. Obviously, it's still early in the day, but theoretically speaking, price can still come as high as that high or as low as this low. So today, it could still do this entire range today and still be narrow as a 4-day range heading into the next day. So again, we could be looking at a very nice breakout at some point based off of how price has rejected prior market structure here. So you can see ever since it broke this to the downside, it came back up, it rejected. These have been failed highs now, or perhaps lower highs. Again, that could easily return price back to the breakout point here at 37.50, and perhaps even lead to a lower move downward, because this would be a lower high. So right now, again, building the energy here, and theoretically speaking, when it builds energy like this in a narrow range, it could break in either direction. So we don't really know direction here, but we do know that volatility and expansion is likely coming soon. So keep an eye on the edges. Above 4100 opens to the upside, below 3875 really opens it up to the downside, but 3039 easily does it as well. Okay, let's take a look here at GC. Now GC is very interesting here because price is holding right at the key range low. We talk about this key range right here. We have the key range high down to this key range low, and now price is sitting right here. And ever since we developed this key range, when we got that strong low and we hit that mid, which was back in early August, I mentioned that the best trade opportunity for bulls, long-term bulls, short-term bulls, medium-term bulls, would be here in this zone here between 1825 and 1875, because if price could get there, it would come into a major LVN, a major market structure level, and it could be a trap opportunity below the key range low, which could then bring us back to the midpoint very easily, and that would be right in the 1957 to 1980 zone. From there, longer term, there's a potential to see a move to the high, and then we trade up in this area up here, so we can get as high as 2100. And if down the road we see expansion to the upside, then we have key range targets that take us to 2200 and 2300. So you can see how many multiples of time frames could be paid if this rejection occurs. So what we'll do here is continue to watch here for signs of rejection. We have a very narrow 2-day range developing. Again, if price is able to reestablish back above 1885s, really the 1874s, that would open up a move back toward 1981. But until then, we're still looking for a very strong low. We may not have found the low. We may need a little bit lower before we find a low. But once we find that strong low, then perhaps we have a bounce back opportunity ahead. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Please be sure to like, share, and subscribe. Have a fantastic Friday and a great weekend. Good luck, trade well, and I'll see you in the trading room. Take care.